G'day there, everybody. Thanks a lot for joining me on this Wednesday afternoon market recap. It has been a relatively interesting week. Let me just rewind and take you back to what we were speaking about over the weekend. I'll be the first person to put my hand up and admit that after the candlestick that we were left with on Friday, that of course being that dark outside day engulfing candlestick, it did make a lot of sense that we were going to see the markets collectively as a whole pull on back down and potentially, close some of these open windows prior to, of course, the continuation of this trend, since we have broken out of the range-bound state, taking us back to all the way to January of 2018. Now, obviously, that hasn't happened Monday through Wednesday. The good news, however, is that we haven't closed any of our outstanding or existing open long positions, okay? In fact, we've been accumulating these positions for weeks, for months, potentially even for longer than 6 months. And as such, the good news about a trend is that it is assumed to be in effect until it gives us definitive signals that it has reversed. Now, today on the SP500 and also on the NASDAQ, we have these two markets closing at fresh new all-time highs. Here we were. This is taking us back to the midpoint of July. This is the 15th over here. As at today's close being Wednesday, the S&P 500 has now taken out this swing high. And as such, you can see on my screen that both the 10 and also the 20 exponential moving average held. Again, I'll be the first person to admit I thought we were going to see that confluence area of support tested down here closer to 2,950. But again, the good news about a trend is that it's assumed to be in effect, and as such, our positions are continuing to work for us. We've not liquidated any of those positions. In fact, we've been looking to re-enter and dollar cost average down at lower prices. If you have had those insurance policies open, first of all, you had been triggered in a couple of weeks ago at 3,005, but what is looking more realistic at this particular time is this 3,032 entry. So what I'm going to do is that although it hasn't triggered yet, I'm going to change this from a dashed line into the default solid line, which means that based off, of course, Monday, Tuesday, and Wednesday session, it does look as though we are going to see that abrupt continuation to the upside that I personally thought was going to happen in a week or two's time. Now on the NASDAQ, again, you can see very similarly that today, originally we gapped down to at least begin Wednesday session, but we closed up 70 points. Look at this long day Morobozu candlestick. It is what we call a shaved top. And as such, again, we've broken above this swing high, which is priced in on the 15th of July as well. Our most recent entry on the NASDAQ was down here at 8,221. Before that, it was 7,917. And even prior to that, was 7,773. Again, I'll be the first person to put my hand up and say that, look, I personally thought that we were going to get a larger, or at least a deeper sort of material sort of correction to retest this most recent breakout point down here closer to 8,000 or 8,100 on the NASDAQ. It doesn't matter, however. The good news is that we've had Q positions for quite a long period of time. All right, we've been accumulating these positions. If I go out to the weekly chart, even on the NASDAQ, the entirety of this range-bound state, we've understood that we have been, of course, cycling, or at least consolidating between support and resistance. And now that the dynamic has shifted, that was the big piece of analysis, the big piece of news that I've really been harping on for a number of weeks since we've broken above this swing high over here at about 8,100. We've been talking about how the dynamic has shifted. And what that means is that when we've come back on up into this resistance area, generally in the past, or most recently anyway, that the sellers, have had the upper hand. The bears have had the upper hand as they have pushed prices off from and down from the ceiling, which has been at about 8,100 points. Since we've had this gap over here, and as soon as we had this gap, we spoke about it, we could see, or at least understand and talk about how that collective psychology had shifted as at this date just here. And that's exactly what has happened. So that retest appears at this particular time to have taken place on Friday as of last week. That would be Friday the 19th. And as such, we've already gone through this process. You can see the reaction off from this rising 10 exponential moving average. In fact, we didn't even get down to the 20 exponential moving average. And if I fast forward over into the ATH and the CCI, you can see that CCI, very important indicator telling us the legitimacy of a breakout and the continuation strength of a trend. It's pushing up above 100. In fact, it's printing at 153. And the ADX is turning up. It didn't get all the way back down into sort of resting area around that 25 point, but it's already turned up and we're trading at 34 at the moment. The S&P 500, just to show you the similar sort of technical indicators, the CCI is 155. It's turning up. It's very firmly above that positive 100 reading, and you can see that we're trying to at least plateau or stop, and very slightly we're turning up again on the ADX. The one market which hasn't done such a thing really at this particular time, or at least to the extent upon which the S&P and the NASDAQ have done what they did today, and of course Monday through Wednesday, is the Dow Jones. The Dow Jones still hasn't taken out the swing high. It wasn't really on the 15th. It was more so the 16th. That's where we got that upper wick, but we're very close. And what appears to be happening now on the Dow Jones Industrial Averages is that, if I can bring this into perspective for you, it really looks to me as though, that we are setting up that type of continuation pattern, right? That stair-step pattern, whereby we're in a very tight trading range. The pressure is sort of bubbling away below the surface. And really what we're waiting for, again, are these exponential moving averages to propel price higher. It looked as though we would have seen it today based off this 10 exponential moving average. It hasn't happened yet. I do think at this particular time that we are looking at sort of a countdown type of scenario whereby the Dow Jones could just explode really to catch on up to what the S&P and what the NASDAQ have done in percentage terms as well. Just wanted to show you very quickly also the transportational average. You can see that we're coming back up. We're flinching just below that 10,800 area. We're still below the swing high over here, or at least the multi-month swing high. Going back to at least May, if we can overcome this little candlestick over here, this upper wick, which took place on the 16th, that's going to open up the window for the transports to more so at least get closer to confirming the original all-time swing high over here. Back in the month of August 18, we're still quite a distance away, but we've got really about 1,200 points to move. 800 points to move. Let me get my maths correct as I look at the visuals of my chart here, until we're really going to see Dow theory confirm that of the industrial average, which at this point in time is certainly leading that of the transportational average. We want to see those averages come close together. It's going to be great for the markets long term and the health of the markets long term if we do see the transportationals in due course break to fresh new all-time highs. But at the same time, and having said all of that, it's very exciting to see the SP 500 closing at all-time highs. Again, this is very early on in the process of the trend continuation higher. I've been saying this openly for quite some time. The S&P is still looking at targets of around 4,000 at least. On the NASDAQ, you're looking at 10,000. We'll see what happens with the Dow Jones Industrial Average. But it really firms up, as I moved my green rectangular box just then, it really firms up again, even more to a stronger extent, that the back test has played out. Even though essentially we have open windows, okay, they can remain open. They don't necessarily need to close. If they were going to close, it looks as though this is when it should have happened. It hasn't happened, and as such, we are reaping the benefits in terms of returns of existing positions already. They're just continuing to snowball, right, and bring in additional profits. Each and every day, this market continues to climb to higher and higher prices. So again, you should be sitting there, hopefully, with a big smile on your face. All right, I'm still a little bit surprised, but at the same time, it doesn't bother me whatsoever, again, because we've had an extensive accumulation period whereby you should firmly have those positions already enacted, and it's always good to see markets continuing to new all-time highs and continuing in the aforementioned trend. Now, a couple of points of housekeeping this week in particular. It's going to be a very busy week worth of actual earnings. Now, the first stock here is Apple. Apple isn't actually reporting until next week, but we do have Amazon set to report, and also with Amazon, we've got Google as well. So I'm suggesting, and at least expecting at this particular time, that you are out of those trades. These are going to be stocks that I recap in the pro analysis class this coming Saturday, whereby we're going to have a foundation of new trade setups. There's only 3 stocks, I believe, out of the 12, whereby they're moving into earnings next week. Therefore, we're going to have a clean slate on 9 out of the 12 stocks that we follow, mixed with the markets for this coming Saturday, which is going to be very exciting. One of those stocks, which although sort of disappointed today, down $11.64, is Boeing Airlines, because number one, we don't have a gap. You can see here, actually I'll remove this little vertical line on my screen, but you can see we've got the overlapping sort of wicks of the candlesticks here. So this suggests that we've just got a clean slate when it comes to an immediate trade setup, which is good. I'll speak about that over the weekend. As at today's close, there is no trade there. Ideally, at the moment, you don't want to be trading counter trend. So if you've got a bearish sort of earnings reaction into a support area, you don't want to be shorting a stock, right? Especially in the face of a market or 2 markets out of the 3 that are breaking to fresh new all-time highs. We've got Baidu, that's the second stock, which is reporting next week. Caterpillar's reported. You can see the gap down today. Whoop, I've just duplicated the wrong line. So again, this is a very similar type of trade setup. First of all, although it is a bearish reaction here, first of all, you've got a white candlestick here, which is bullish, down $6.19. A high wave spinning top. This is reset now below the swing low over here. And as such, it's back testing what I believe to be a critical support or past resistance as new support. So this is going to turn out to be probably counter to the prevailing sort of sentiment anyway, to set up to be that of a bullish trade setup in due course. Again, I will recap that in the weekend. If these gaps are in the upside direction, we'd have immediate trade setups to continue with the markets higher, but they are gapping in the opposite direction, which is allowing us to enter at lower prices when you think about it, to take advantage of that upward swinging tide or the momentum of a rising market, which is going to be very favorable. COP is set to report next week. We've got Disney, which is pushed out into August. I've spoken about Google, IBM, which is really interesting. I spoke about this on earnings last week. Okay, we got the original gap up. We're trading sideways, and we said, look, we need to give it a little bit of time for this to set up either a bull flag or that of a stair-step continuation. It looks as though we're setting up the stair-step continuation. Entry price 152.50. No hesitations about that moving forward. We've got Microsoft strengthening. It was looking as though we were going to pull back. This fell into sort of our analysis anyway, or our sort of hypothesis as to if the market was to actually retrace, we'd be looking at Microsoft coming back down into this green rectangular box. That obviously didn't happen. As such, we've had the insurance policy up here at 141.20. That seems to be, all right, as at the close on Wednesday, very close to triggering. We're within 50 cents of this breakout trigger point on Microsoft. But again, push those expirations into the future so you can hold this for a number of months. If not, look at this through to a 2020 sort of outlook, whereby the minutia of the market noise isn't going to upset the trade, the trade setup, so to speak, if you see it pull on back down and linger around 138 for a little bit longer than what ideally you'd like to, if you don't get that clean breakout at 141.20. There's just some food for thought there. Again, you have to be patient with this market. And the final stock that I'm going to talk about right now is Netflix. This is really no surprise to me. We refuse to actually short this below the swing low over here directly, all right, for a reason such as this, as to what happened, right, during today's session. You get the markets breaking out, the markets are rising, okay, they're in a bullish trend. And as such, for those shorts, especially those who actually continued to short on Monday and Tuesday, they are now trapped short with the entirety of a short squeeze, which is potentially underway right now, very early on in the process. But it wouldn't surprise me if we failed to break below that of Monday and also Tuesday's intra-session lows. So again, the golden rule of not trading or at least counter to the prevailing trend is very important. You can apply it to Netflix right now. And as such, I'm really tempted to bring down 332, but I'm going to allow it additional time because I think we are going to set up some range-bound sort of state whereby we sort of oscillate back and forth, and then in due course we can bring down this 332 entry. But a really good learning opportunity for people who I'm hoping, I know for a fact at least that in pro you wouldn't have done this, but for people out there who do follow Netflix and do trade Netflix, and if you are underwater, it's a really good opportunity as to as what you shouldn't do after earnings. And again, you can relay Netflix back into some of these companies that have seen gaps to the downside, Boeing Airlines, Caterpillar, these very slight gaps, whereby you're not actually going to place short trades below the swing lows. In fact, you want to let it stabilize and then trade in the direction to either close the open gap. And again, I just look at this and I'm thinking this myself sort of internally without explicitly saying this outward. But again, the magnet of this trade is all the way up to 365. You can get creative with the analysis, especially when it comes to resistance and individual trade setups. But that's something I'll leave for that pro analysis class this coming Saturday as well. The big story at the moment, NASDAQ and S&P at fresh new all-time highs. That's what you want to take away from. And again, for those who are doubting the continuation of the bull market higher, it didn't matter if the market pulled on back down. We were still looking at it continuing over time. We've made that very clear, abundantly clear, that both of the options lead to higher prices. We've already got our vested positions open, all right, and accumulated. Maybe you're going to jump into some more, which is fine. But think about this market in a longer duration out to 2020. And this is the good time. I mean, as a technical swing trader, this is what we dream about, a trending market whereby you've got an established position. You can sit back and just allow those profits to sort of trickle in each and every day. All right, and that's what we're looking for in these markets. Okay, if you have any questions, email me, success@pivotpoint-trading.com. Until next time, enjoy your evening, everybody, and I look forward to seeing you in that analysis class over the weekend. All the best. Farewell.